the witnesses, I would like to take a minute to say that this committee has had a very productive 2 years, and that was largely thanks to your leadership, Mr. Ranking Member. While we may not have been seen eye to eye on every policy, I always appreciated your input. I knew that it was motivated by what you deem best for small businesses. 9 times out of 10, we ended up with a better product as a result. And of course, let's not forget how much you taught me about AMWAR. I now know more about that place than I ever dreamed or hoped to know. So I could go on and on about you, Steve, but I don't want these witnesses to think that they are going to get off easy. But seriously, it has been a pleasure getting to work with you and getting to know you. Thank you for your service. And you have a friend here in the House of Representatives.
Well, thank you very much, Madam Chairwoman. It's been a pleasure working with you, and I think we were able to work together in a bipartisan fashion for the good of the small business community across the country, and I consider you not only a colleague but a friend, and even though we're different parties and different philosophies relative to a lot of issues, we did work together, and our staffs did too, and I think we both have excellent staffs, and it's been a pleasure working with you.
Thank you. And now it's my pleasure to welcome the Honorable Randall S. Kroszner. Mr. Kroszner is the member of the Board of Governors of the Federal Reserve System. Dr. Kroszner took office on March 1st, 2006, to fill an unexpired term ending January 31st, 2008. Before joining the board, he served the Federal Reserve System in several roles, including visiting scholar at the Federal Reserve Banks of New York, St. Louis, Kansas City, and Minneapolis. The Federal Reserve System was founded by Congress in 1913 to provide the United States with a safer and stable monetary system. Welcome, sir.
Thank you very much. Chairwoman Velasquez, Ranking Member Chabot, and members of the committee. I'm very pleased to appear here on behalf of the Federal Reserve Board of Governors. My remarks will briefly address how the ongoing financial turmoil and weakening macroeconomy appear to be affecting small business credit. In addition, I'll discuss how recent policy actions of the Federal Reserve, the Congress, and other government agencies should assist small business going forward. To summarize, the information we have received indicates that over the last 6 months, it has become more difficult for small businesses to access credit, but that at the same time, the demand from small businesses for credit has also declined. Commercial banks, the most common source of credit for small business, have generally both imposed more stringent credit standards and increased the interest rate, spreads, and fees. In addition, deteriorating financial positions in both small businesses and the household sector are almost surely reducing the creditworthiness of many small businesses and thereby constraining their access to credit. That said, the information we have on the volume of small business loans suggests that credit is still generally available, albeit on significantly stricter terms. Small businesses generally report that reduced demand for their products and services caused by a lower level of economic activity is a more serious concern than is the tightening credit supply conditions. Importantly, there is some evidence that concern over access to credit is relatively stronger at larger businesses. I'll now highlight a few specifics from the much more detailed written testimony that I've submitted to you. In the board's most recent Senior Loan Officer Opinion Survey on bank lending practices conducted in October that Madam Chairwoman had made reference to, a net 75% of domestic banks surveyed reported they had tightened standards applied when approving commercial and industrial loans to small businesses. But small businesses were not alone. Almost a net 85% of domestic banks reported having tightened credit standards on such loans to large and middle market firms. Importantly, the net fractions of banks reporting tighter lending standards and tighter price terms on loans and businesses of all sizes were very high by historical standards going back to 1990. Business surveys, such as the recent monthly surveys from the National Federation of Independent Businesses, NFIB, suggest that financing conditions for small business have deteriorated substantially over the past several months. That said, financing conditions have continued to be ranked as the top small business concern by only a modest fraction of small businesses, 5% in the October survey. Changes in the quantity of loans at banks also suggest that small businesses have generally maintained their access to bank credit, although new grants of credit tend to be subjected to stricter standards and terms. Turning to credit demand, the NFIB survey results are quite pessimistic. For example, the survey indicates that small business optimism dropped in October to its lowest level since the monthly surveys began in 1986. Some 23% of firms indicated that sales were their main concern. Results such as these, when combined with other survey data, suggest that demand concerns generally provide the most serious challenge currently facing small businesses. Policymakers both in the United States and other countries have taken a series of extraordinary actions aimed at restoring market functioning, improving investor confidence, and stimulating economic activity. The benefits to small business from these actions will be largely indirect, but nevertheless real. For example, improving interbank funding markets and restoring public confidence in banks and other financial institutions benefits small businesses by lowering intermediaries and thereby small businesses' borrowing costs and increasing the volume of loans that banks can extend. Importantly, some of these policy actions will also directly benefit small businesses. For example, recent reductions in the federal funds rate should result in small businesses facing lower borrowing costs. In addition, stronger economic activity from lower interest rates should result in small businesses enjoying increased demand for their products and services. Going forward, the evolution of small business access to credit will be strongly influenced by the success of these and other recent policy actions. Given the current financial and economic environment, the sizes and effects of the recent policies on both the economy and small business directly are highly uncertain. For these reasons, the Federal Reserve will continue to monitor the financial markets and economic conditions and their effects on small business access to credit as part of their efforts to restore the health of the U.S. financial system and our economy. Thank you very much, and I look forward to your questions.